That said, let's get in Anand Shah, Chief Investment Officer, PMS and AIF at ICICI Prudential, who joins in. Hi, Anand. Good morning. Not the best morning, right? Because India was hoping a few months ago that we were off the blocks in a flash and maybe we get a favorable deal. That's not come about. But if you look at the reaction, initial reaction, it's not too bad, actually. What's your view? Do you think the street was sensing that this is going to be, a bit tricky, and that's why we have already pulled back close to 4% in the last month, and we were already underperforming what global equity markets were doing?
Hi, very good morning. And yes, to that extent, this is not completely unexpected. The negotiations have been going on for quite a while, and this is what it is. The way I look at it, to me, now we know what's the worst case scenario, be it at a economy level, at individual sector levels, or at individual company levels. We know what is the worst that can happen. All said and done, these tariffs are disruptive in a massive way for all the industries and all the companies in all the countries who are in a way trading with US. And to that extent, it's no different for the Indian companies also. The good news is that India, in that sense, is not that much export-oriented. It's not been that successful in exporting lots of goods into the US market. And to that extent, the overall impact on the Indian economy and Indian markets would be much smaller than what it otherwise would have been for any of our neighbors who have significant reliance on US exports for their own GDP and growth.
Hi, Anand, great to have you on. I want to talk to you about pharma, right? Because pharma actually has been very resilient in all of this topsy-turvy environment. The pharma index is up about 6-7% so far this year. Individual stocks have done more. But there is that sword looming on pharma as well. God knows what happens next. How are you positioned on the sector?
So again, not only pharma, if you see the overall exports basket of India, again, it's not that we are making either supernormal profits in many of the sectors that we are participating, like textiles and others, or we have a significant competitive edge, which is the case with pharma. So to me, I think the expected impact of the tariff on overall exports from India would be far more muted than what we believe or what the market believes can happen because of that tariff. I think overall, if you see the tariffs as a whole, eventually it will be borne by either companies which are making supernormal profit, either in US or outside US. So either it's manufacturer or retailer. But if that's not the case, if the market's not been very efficient and companies are not making supernormal profit, eventually the consumers in US, which is going to pay the price for that. And that's no different for pharmaceuticals also. So to me, that's not today the case. They have exempted pharma for the time being. And to that extent, that's not under debate today. But I'm saying generally, it's not that India has exports where the margins are very high. And to that extent, we will have to absorb some of the tariffs. I think a lot of tariff eventually will be absorbed by the consumers in US.
All right. Anand, since the global space is in a bit of a flux, a lot of focus on the domestic themes. If you were to pick up that one domestic theme that you like, which one would it be? Give and take everything, give and take things are going to improve from here on. What would that sector be?
So I think India is significantly domestic, and within that, there is consumption of goods and there's a consumption of services. India is, as the per capita income grows, services consumption is becoming increasingly larger pie of the overall consumption piece. So say pre-2000, we would have been 65% consumption of goods, 35% consumption of services. As we speak today, it would be like 50% consumption of goods and 50% consumption of services. So I think one piece which we have been closely watching and we've been sort of invested also is the consumer services business, be it telecom, be it healthcare, be it transportation services, be it entertainment services, be it financial services, wealth management. Those are the areas where incrementally the Indian household is is spending or / investing in those areas.
But Anand, with the equity market being so ranged, isn't there a bit of a near-term threat maybe to some of these capital market businesses that have done really well, right? Those who managed to ride the wave, they've made a lot of money. But now within capital markets, if you have to take long-term bets in the portfolio, would you be with exchanges, with wealth managers, with asset managers? What parts of it?
No, indeed, these are all plays on capital markets. And as you rightly said, they will have a higher beta to the overall economy and the markets than what otherwise the rest of the sectors would have. Having said that, I think markets have been expensive for a while now, and we've been all along talking about it. So I think from investors' point of view, I think they need to brace for, notwithstanding the tariff thing, you need to brace for corrections in the market as it is, given we had a very, very sharp fall from October to Feb, and equally sharp rally from Feb end to June end. So I think overall economy is slow. It's known. This tariff uncertainty has further put pressure globally on the global growth, on the US growth, on the China growth, and that's also impacting. I think the first step in terms of monetary easing is there. I think we need to continuously focus on improving domestic consumption, and I think the lower interest rates and higher liquidity in this banking system.
Sure.
Credit growth pick up and a little bit of a domestic growth pick up.
Okay, so keeping the faith on the capital markets side of the market itself, businesses, we'll take that on board and, remember that one. Thank you very much, Anand, for joining in on what's been a very, very news-heavy morning for us over here.